We're back on it again, traders. What's going on? It's your one and only skill coach, Team Legend, and I'm super excited having you all here today on this one. Very simple strategy that you can use to catch a lot of spikes in the boom and crash market. Are you ready? Hit the subscribe button in case if it's your first time here, and smash the like button if you love this video. Let's go. So here on this trade right now, you can see I'm on a sell, and the trade has been going in favor. And now you ask me, team, how did you take this trade and what did you look out for? Three things: support and resistance, chart pattern, and my candlestick patterns. Now here you can see what we have here. We have what? A shoulder, all right? We have the leg, and then we have the head. And then we have the second shoulder. This is what we call a head and shoulder pattern. Now, a head and shoulder pattern is a very important and beautiful chart pattern that you can always use as a good confluence to take trades in boom and crash. Boom and crash volatility index, that's VIX 75. All right, the head and shoulder always works wonderfully. So how do we identify head and shoulder? Here you have shoulder, you have head, and then you have the next shoulder. Then you see the candlesticks, all right? That shows rejection, and that's why you can see the bears really pushed down, okay? So three things I actually looked at: your rejection from the candlestick, then the head and shoulder, and the resistance. This gives you good confluences. Let's look out for another. This is an inverse head and shoulder. You can see a head, and then you can see the shoulder, all right? Here is the second shoulder, and then that was the great push. So head and shoulder, inverse head and shoulder, these are two patterns. Here is another one. Here you have shoulder, you have the head, and then you have the next shoulder, and then the bears push massively. And you can always see a rejection of the candlesticks after each shoulders. Yeah, you always notice some kind of rejections. So let's look out for another one. Let's see. And always make sure your head and shoulder is on the right zone, okay? There's another head, another shoulder, and there's a massive fall, okay? Always make sure your head and shoulder is on the right zone. For head and shoulder, you want to spot it at a resistance zone. And for inverse head and shoulder, you want to spot it at support zone. Very important. Now, I want to show you another thing. Sometimes your head and shoulder can also fail. All right, you can see here we have the shoulder, head perfectly formed, but what happened? It failed to move bearish. What happened? Why? Because sometimes this pattern can form, but the bulls or the bears, whoever the market is standing against, can always reject. Okay, so you always want to make sure you be careful. And that is why I also advise you look out for your candlestick patterns. All right, so here we have, let's see, another head and shoulder. I think I should be able to find another. Okay, I'm not able to see another one. So what you need to do right now is train your eyes to understand these chart patterns. Go through the market, go through the charts, spot out these patterns, and practice. And that's how you become perfect. Smash the like button if you love this video, and I'll see you on the next video.